Welcome to SBA University, lesson number 5, the SBA Loan Process. Yes, the process. A lot of people have a lot of concern about the SBA process. They say it's long, there's tons of documentation, they put you through everything, and then finally you get the money at the very end right before you're ready to quit. And honestly, there is some truth to that, but it doesn't have to be so painful. This episode is going to focus on the SBA loan process from beginning to end, so you know exactly what to expect, how to prepare yourself for all the things that are going to be required, so when you get to the end of the process, you'll be able to tell all your friends and family that it wasn't that bad. So let's start at the beginning, which is going to be the pre-qual process, right? That's where you're going to talk to the lender. You're going to learn about what they're going to need from a documentation standpoint. You're going to start looking at the financials. They're going to start to see if your loan request is something that they might be able to approve. So you're going to be working with an SBA specialist. They're going to be collecting all the documentation. There should be some back and forth, giving you some feedback, things the bank likes, things that they don't like. And usually by that point, they'll issue you a pre-qual letter. Now that pre-qual letter doesn't necessarily mean that you've been approved, but it should mean the bank has looked at the file and they like it enough to take it into underwriting. So once you get that pre-qual letter and you've submitted the checklist of items that you need, now in that checklist, you're going to have things like 3 years business tax returns, year-to-date financials, a profile. You got to understand the business. Who are their customers? What do their receivables look like? What debts do they have? Are there any fluctuations in cash flow over the last few years? Any anomalies in terms of add backs, things like that? They're also going to analyze you. So you're going to have to provide a personal financial statement. We're going to have to list out all your assets and your liabilities, right? The bank's going to want to know what kind of borrower are you from a liquidity standpoint, after you put your down payment and how much cash you can have left over to live. So it's going to be a due diligence not only on the business, but you as well. So you're going to take all that information, package it, and give it to the lender. The lender should look over everything, hopefully check off the entire checklist, and then at that point, they're going to get submitted to underwriting. So let's talk about what that package looks like once it gets into underwriting. Now, typically, underwriters are going to be a little bit more risk adverse than a BDO like myself, right? I'm going to put together a package that says, this is why we should do the deal. Here's all the strengths. If there's weaknesses, I usually like to point that out, but have reasons right underneath that as to why we should do the deal. The underwriter is going to dig probably a little bit deeper in the financial package, right? They're going to come up with things that concern them from a bank credit policy, from an SBA eligibility policy, and their job is to really try to find anything and everything that could potentially go wrong with that acquisition. Now, a lot of that process will be back and forth now, right? The underwriter's going to look at the deal. They're going to put together a list of questions or concerns. Typically get the borrower involved at that point. You'll get those questions. Some of them might be on you personally, some might be related to the business. And even though there's back and forth, I think this is a really good opportunity for you to really take a deep dive in the business you're buying, right? It could be something as simple as the owner sold a vehicle, a company vehicle, made $45,000. That was considered revenue, right? So that's a one-time transaction. Probably will need to remove it from the top line revenue. There might be some back and forth. I'd like to say that time period of the underwriter review should take anywhere from 2 to 3 weeks, give or take a week. And honestly, it's how quickly the back and forth can go on, how quickly you can get documentation from the owners, how quickly you can provide maybe documentation of yourself. Once the deal gets approved, then you're on to the next step, which is reviewing the commitment letter. Now, the commitment letter has all the approval details on it, the terms, the rate, if there's a seller's note, what those repayment terms could look like. And typically we'll have a rough draft list of all the items needed post-commitment to collect to close. So this is a big step in the process because you really want to review that commitment letter. You want to make sure that it has the terms that you originally agreed to. You can compare it to the pre-qual letter. And then you want to look at the list of items that potentially are going to be asked for, right? Make sure there's nothing in there that you think could cause an issue with the seller. Everything looks good. Sign that commitment letter, get it back to the bank. Congratulations. Now you're in the post-approval process. Here's the list of items that you need to collect. Now, this process can take some time. There's a lot of due diligence that needs to be done. And that's not a bad thing, right? You want to make sure you're getting a business that's clean of any liens. So they're going to order a UCC lien search, right? Make sure if there's any debts associated with the business, they will be paid off at or before closing. There'll be a business valuation performed just to make sure that you're paying a fair price for the business. There will be also tax transcript verification to make sure that the financials provided to you and to the bank match what the IRS has, right? There's been times when that has popped up as an issue, not so much that the seller was trying to misrepresent the business, but maybe there were some amended taxes, changes done after the fact. And we just want to make sure that everything that's been provided is up to date and accurate. Insurances have to be in place, right? You need to make sure you have proper insurance on the business on the day of closing. If you've got vehicle insurance. A lot of banks will require life insurance in situations where there's a lack of collateral. So that could take some time, especially if there has to be any kind of medical tests that need to be done. And you have to remember, if you're buying a business that leases a space, you're going to have to sign a new lease with the landlord. The SBA loan is a 10-year program. They're going to want to see a 10-year lease to match that. Now, it doesn't have to be a straight 10-year lease. It can be a 10-year lease with options. But the idea is that the landlord cannot kick you out 4 years into a lease and not be able to pay our SBA loan back. And then ultimately, we have to have a final copy of the purchase agreement. Any seller note adjustments need to be updated and corrected at closing as well. And all this stuff is just review, right? Doing all these things, due diligence, get these items in, make sure everything looks good, and that way we can clear this deal to close without any issues or concerns. Of course, when going down this checklist of items, there could be issues that arise, a business valuation that comes back low, an environmental if you're buying real estate that comes back with potentially some contaminated issues. You'll need to work with your lender to see what kind of resolutions they could have. You know, things like life insurance where maybe you don't qualify, a lot of times lenders will be okay with it as long as you can provide documentation. The idea is though, it's going to be a long checklist and you're going to want to just work through it. Hopefully the lender can help guide you through the things that take a lot of time. You're going to want to jump on those first to hopefully you do not delay closing. But that process, again, you got to give yourself 3 to 4 weeks. So when you think about the application process potentially taking 3 to 4 weeks, think about the post-commitment process taking about 3 to 4 weeks. Again, it's all about setting proper expectations on how long it could potentially take from beginning to end. A lot of times the original closing date cannot be met, but as long as all parties stay informed and you're all working toward the same thing, typically if we need to push it back a few weeks, that's not going to be a deal breaker for anybody. So you've made it to the closing table. So what's next? Signing your closing docs, right? Typically, especially now with a lot of national lenders not being there present, a lot of times you'll have a third-party closer show up to your house or your office, go to a title company, and they'll present all the docs to you there. Now, it's as simple as signing paper, right? It's obviously important to review all the details on the loan documents. It's going to have the details of your personal guarantee. What does that mean? Are you pledging any collateral? A lot of times you might have to pledge a home as part of the transaction, so you might want to review it, make sure it's in there correctly. You're going to want to review the note, correct? So the note document is going to have all the details of the transaction. It's going to have the loan amount, the rate, the payment, the guarantors. Obviously, very important to make sure all that is accurate at that time. Any purchase agreement, seller notes, the settlement statement, the breakdown of where the proceeds of the funds are going to, these are all going to be documents that are going to be available for you to review at the time of closing. You're going to want to make sure they're all accurate. Typically at that point, your equity injection has also been wired into the title company or to the bank. And so once those documents are signed, they're collected, they're sent to the bank for review. As long as everything looks good, everything's been signed, dated correctly, titled correctly, the bank will then release the funds. Typically, funding will happen same day or next day. So your seller will either get funds the same day if it's a morning close. If it's an afternoon close, more than likely, they'll get the funding the next day. So there you have it. That's the loan process. When you're going through it, it seems like a lot. It feels like a lot. I get it. I go through it all the time. But ultimately, the best part of my job is the closing table. I always like to be the first one to say, congratulations, you've done it. You're now a business owner. It's a great feeling, and it's why I love this job so much. I hope this video is really helpful in understanding the process from beginning to end. Again, if you have any questions, please feel free to leave them in the comments and I'll get back to you. Until next time, class dismissed. Thank you for watching this episode of SBA University. Hopefully you found this episode helpful. If you need to get a hold of me directly, I'll leave my email address down in the description. Be on the lookout as I will be releasing new lessons every week to help you in your SBA journey. Thanks.